Good evening, everybody. We'll get started here in a minute. All right. Before we get started, still want to remind everybody that we are going to be doing a private training session up at Keuka Lake. We've already got a few people signed up. We've got a few more spots left. It'll be starting August 11th, which is a Sunday. So we're going to go all day Sunday, Monday, and half of Tuesday, and we'll let everybody head home on Tuesday evening. Again, these private training sessions, we start from A and go right through to Z. You're going to get a ton of information. The difference is going to be that when you get done with this type of training session, there's two benefits to it. Number one, anytime you have a fuzzy area or a gray area, we bang it out until you understand it completely. So if you have a question about something, you don't get kind of a 1 minute answer or a 30-second answer.
That
like
white MM13
online.
120.
Finger Lakes area has become very popular for especially the Rieslings. We also have the Curtis Museum. Curtis was the one that started with motorcycles. Each volume. Curtis started with motorcycles and then made the Curtis airplane for World War II. Interesting little museum. Plus, there's Amish. Amish flea markets, farmers markets. So, and it's a good place even if you want to bring your spouse who may not be an investor. There's going to be plenty for them to do while we're sitting in front of the screens. Keuka Lake is in upstate New York. The Amish Airplane Museum. That's right. It's up in just south of Rochester and Syracuse, New York. So, all right. I guess we got everybody in now. All right. Okay, tonight, because of my great abilities to make everything concise so we can get in and out fairly quickly, that once again has not happened. So tonight what I'm going to do is we're going to go through a canned kind of spiel on how to use candlesticks and gaps correctly. Not only the fact that they use them correctly, but it helps you identify high profit trade situations. And then I will go through some live charts afterwards, and but that's going to run out of time. So unfortunately tonight we won't have time for a question and answers as far as individual stocks. We will have time for questions and answers as far as questions on candlesticks. So anyways, with that, we'll get started. Basically what we want to do is learn the simple logic that is incorporated into a gap and kind of construe that, not construe that, but assemble that with candlestick signals. So knowing what signals to look for and identifying gaps help us be prepared for big price moves. And the location, yes, this is being recorded. Jim, I hope you're out there. Yeah, I'm sure Jim is out there. There you go. Jim's got the message out there for us. So essentially there is four basic gaps. Two of those show force. And that is when you see a gap up from a candlestick signal in the oversold area, that not only tells you there's been a change of investor sentiment, but that change has got a lot of power behind it. Same scenario with seeing a candlestick signal at the top, followed by a gap down. That tells you they're wanting to get out of that position very rapidly. So the other two gaps basically show exhaustion. Now, if you have kind of listened to the preaching here on the Candlestick Forum day after day, where do most people buy? They buy exuberantly at the top. And this is what the Japanese race traders have made very clear in the graphics of candlesticks, is watching for a candlestick reversal signal after it's gapped up in an overbought condition. Or where do most people sell? They panic sell at the bottom. If you see a gap down in an oversold condition and see a candlestick potential reversal signal, first thing you want to do is start looking for a candle reversal. So very simply, if you're in the oversold area and you see a gap up, it's time to buy. If you see a gap up in the overbought area, it's time to start taking profits. So the first one we want to look at is that gap up in the overbought condition. And this is where exuberance comes into a trend. Anytime I see a trend, we're in an overbought condition, and you see it gap up, start watching for a sell signal. Yes, I am sharing the screen. Is that due to panic, exuberant buy and sell at the bottom of the top? Yes. All right, I'll take a step back here for, guess we've got some new people in here. Overbought and oversold, I use stochastics of 1233. If the stochastics are above 80, that means you're in the overbought area. If the stochastics are below 20, you're in the oversold area. The moving averages that we have on here is those slow stochastics. The blue line is the 50-day moving average. The gray line is the 20-day moving average. And somewhere on here, you're going to see the red line, which is the 200-day moving average. Also, this is the most important one. This black line is what we call the T-line. That's the 8 exponential moving average. And there's one criteria for the T-line. Very simply stated, if you see a candlestick buy signal and a close above the T-line, you're in an uptrend until you see a candlestick sell signal and a close back below the T-line. Brenda, you make the screen bigger on your own chart. Jim, can you help Brenda? Let's see. There's one caveat to the T-line. The further away you move from the T-line, the higher the probability it's going to come back and test it. The T-line is the 8 exponential moving average. Justin, if you're working with whatever service you're working with, a brokerage firm, put it out there. There'll be somebody on here that will tell you how to fix it. So anytime I see a gap up in the overbought condition, I'm starting to look for sell signals. Again, the blue line is the 50. The red line is the 200. The gray line is not on here. There it is, very light, is the 20. The reason we have those on here is that that's what all the major money managers around the world use for making their decisions with their portfolios. We have the advantage of seeing exactly what's going on in investor sentiment at those moving averages. So, again, there's that doji gap up in the overbought condition. Start, and notice how far away you've moved from the T-line. Start watching for a sell signal. This is what helped me out immensely because I was always my biggest problem was when to take profits. Because if I was in something good, I'm thinking, man, oh man, this is the one that's going to make me a fortune. This is the Dell of my life that is going to make me a millionaire. And then I see a gap up overbought condition. I didn't want to sell because what if I sold and it went higher? Well, now I've learned that the probabilities are extremely good that if you see a candlestick sell signal in the overbought condition, take profits. We have patterns that will tell you when to get back in. Yeah, the Tesla of our time, right. All right, so a gap up in the overbought condition is basically telling you you've reached exhaustion. And if you can see that occurring at levels that everybody else is watching, a gap up, spinning top right at the 200-day moving average with stochastics in the overbought area, you better be watching the next day. If they start selling this off, it tells you a very clear message. This is where everybody's decided they're going to take profits at that resistance level. A gap up, is this the absolute top? No, you're going to find out that most of the time, if it's not the absolute top, you've gotten most of the move out of this trading. Let's see, the chart size is a little small tonight. Okay, hold on for a second, everybody. Maybe that is me. We're going to click off for 1 second. Way better. Okay. All right. Okay. If we're buying down here because we've got a left-right combo right on the 50-day moving average, and notice the simple logic of, or the common move of a price move is if they break or breach a resistance level, they'll come back and act as support. We can see immediately whether it's going to act as support. A left-right combo tells us we've got a strong buy signal. If they're buying off the 50, where do you think their next target is? The 200-day moving average. When it gets to the 200-day moving average, a left-right combo is a doji followed by a bullish engulfing signal, one of the simple high profit patterns. The gap up in the overbought area and a spinning top right here on a 200-day moving average, and they start selling it off, take profits. This is just to showing you where the probabilities are that it's time to get out of a trade. If we see a gap up in an overbought condition, and they gap it up and gap it down the next day, that's your abandoned baby. That's one of your strongest reversal signals. That gap up away from the T-line is pretty good evidence that that's the exuberance coming in. It's time to take profits. And this was always me. Before candlesticks came along, things look good in this one. Look good. I'm finally going to buy because everything looks rosy, and I could never figure out why when I bought, it immediately went down. That's because that's normal investment behavior. Is I want to be convinced that this is going up, and finally when it's going up, I'm going to be a buyer, and that's usually at the top. Okay, so the opposite is if you see a candlestick sell signal, a potential sell signal at the top, and they gap it down, that pretty much tells you, if you just analyze what each signal and what the gap tells you, if you're in an overbought condition and you see a doji, what's that represent? That represents indecision between the bulls and the bears. They gap it down the next day, that pretty much tells you they've made up their decision and they're trying to get out of this trade with great enthusiasm. So anytime I see a doji followed by a gap down, not only do you want to be out of that position, but you want to consider going short. Doji, notice how far away you are, and again, here's the warning signal. We've got a doji more time. We have another doji. They gap it down the next day. That pretty much tells me, this whole scenario told me this is where the exuberance is coming in. It's time to start taking profits. Notice what the T-line has done for us this whole way. This is IBM a while back. T-line told us pretty much that it's acting as support. Finally, we have a doji. We're up here in the overbought condition, and they gap it down below the T-line. That pretty much tells us exactly what's going on in investor sentiment. Let's see. The volume keeps dropping. I'll try to keep yelling louder. This tells me that I have an extremely high probability that not only is the uptrend over, but there's going to be a good, strong downtrend. Anytime you see that gap up in an overbought condition, start watching for your sell signals. Anytime you see a doji gap down, start going short. Here's the abandoned baby. This is basically a one day. If you're not, oh boy, somebody might want to help Greg. Tell him to log off and log back on. If you see a one-day island reversal, that's one of your strongest reversal signals. Further away you move from the T-line, overbought condition, you see a doji, and they gap it down the next day, close out the position. what's the first target? First target is going to be, they're going to come back and test the T-line. If they do positive trading from there, you can always buy back in. If they close below the T-line, you know you're in a downtrend. Doji, gap down. You're going to start a strong downtrend. This, a lot of people through the years, I've heard people say if you're, stay away from gaps, because if they're gapping it, you don't know what they're doing. That's probably pretty much somebody that doesn't know how to invest, which is most of your money managers, that their theory of investing is buy something good quality long term and eventually it's going to work out for you, which if you went through 2007 to 2009, that theory didn't work at all. Let's see. So Doji gap down, you're heading down with force. Yep, we did that one. The other side is exhaustion. When they gap down in an oversold condition, start watching for buy signals, because that's where you're in a downtrend, and usually it's probably some sort of news where they gap it down. You got to consider, if they've got bad news and they gap it down, who the heck is buying? It's usually the people that knew about the bad news coming and they started selling up here. Now, once the bad news is out, what's the next news that's going to be out? It's probably good news that they've corrected whatever this bad news was, which starts your uptrend. Now, I have found through the years that if you see a gap down, especially in big stocks like IBM, Dell, some of those, if they're going down, and then they gap it down big, somewhere between 4 and 16 weeks, they're going to be bringing it right back up again to fill that gap. Anytime you see that gap down, start seeing if they're going to do some sort of reversal signal, and then if they do, confirm it the next day. That means you're now reverse that trend. Gap down. Next day, a bullish Harami tells us the selling has stopped. They gap it up the next day. That's basically your island reversal. Stochastics in the right condition. Now, a lot of people will say, do you use volume when you see a reversal? And very rarely do I use volume. A lot of people say volume and price have absolutely nothing to do with each other. You're not buying volume, you're buying price. Now, if you do see a big volume day on a day that there's a reversal going on or in that pattern, that basically tells you there's been a lot of change of stock usually from the weak into the strong hands. That's that much more indication there's been a change of investor sentiment. Gap down, hammer signal, look for a positive trade in the next day. Notice how far away you are from the T-line. Probabilities are the worst case scenario is they're going to come up and test the T-line. You're still going to have a profit in it before you see whether it's going to work or not. So when they gap down, the advantages we have is if this was a bar chart, it looked like this stock was down a big percentage. What we can see is that when they open this up, they started buying down here, starting the uptrend again. There's that island reversal. You see a gap down. Look at our bullish Harami. That basically tells us at the bottom the selling has stopped. Now when they gap it up, that tells you you're going to be in a strong uptrend. So your best friend is seeing a candlestick signal in the oversold area followed by a gap up. Again, this comes back to, for so many years I heard money managers say stay away from gaps because you don't know what they do. Candlestick signals and gaps are your best friend. And we call it your best friend. Anytime you see a doji followed by a gap up, especially through the T-line, that pretty much tells you not only are you going to be up in an uptrend, you're probably going to be in a very forceful uptrend. Anytime you see a bullish signal followed by a gap up, especially through the T-line, you're going to be in a very strong uptrend. How long are you going to be in this uptrend? Probably till you see a gap up in the overbought condition. It's probably now telling you it's time to start taking profits. Now, does that happen every time? That this tells you it's time to buy, this time it tells you to sell? No, but the probabilities are so great in your favor that if you try to go against it, you're going to get burnt. And I say that because I'm the type of person that doesn't like to make the same mistake 7 times. And every time I've gone against what the charts were telling me, probably 90% of the time I've lost money from going against them. There's other times when you get a gap up when it's confirming a couple things. In this case, a J-hook pattern and a resistance level. So when they gap it up through there, it's also confirming our J-hook pattern and telling us that this resistance level isn't acting as resistance anymore. We've got a high probability that we're going into a strong uptrend. Gap up at the bottom, gap up at the top tells us it's time to take profits. So I'm looking for this type of situation where you see, in this case, an inverted hammer followed by a gap up above the T-line. That probably tells me now I'm in an uptrend. Nugget today, what should we be prepared for? We're kind of seeing a kind of a rounding bottom here with a doji followed by a gap up in price. Let's see. We're gonna each one of these patterns I'm mentioning. There's only a few of them. There's like 6 high profit patterns in candlestick analysis. There's 12 candlestick reversal signals, 6 longs and 6 shorts. So I'm kind of mentioning them in passing because we're concentrating more on gaps. So if I see a gap up from a doji off the T-line through a resistance level and it closes right here, what should we be prepared for? Well, if it opens positive the next day and breaks out through this level, that pretty much tells me I've got wave 1, wave 2, starting wave 3, high probability situation. Again, because of the doji gap up. This also makes it very easy for us to get into a position that has a high probability of going higher, and it also makes it very easy to get out of a position that's not working. So if this opened up higher and then closed back down here, I'm out of the position. Why? Because this pattern told me we should be breaking out into new territory. If they open it here and close it back here, I'm out of the position because they're not breaking out into new territory. That was the whole reason for buying this on positive trading. So here's your best friend. Notice how far away you are from the T-line. You have a doji in the oversold area followed by a gap up. What do you think your first target is? The T-line. Even if it came up here and failed, you're out of a failed position with a good little profit. On the other hand, we know all our other indicators. If they open up positive the next day and do a doji, what do we expect? We expect a doji sandwich, which tells us this candle right here is going to be the equivalent of this candle right here. That tells us we're still heading up for the next resistance level. Bullish Harami followed by a gap up tells me that I've got a strong price move. I'm heading for the next target area. This is your best friend. A series of dojis followed by a gap up tells you you're going to have some more upside to it, especially when you're coming out of an oversold condition. Doji followed by a gap up. What's the results? It's usually going to be a very strong price trend. The T-line is the 8 exponential moving average. So here's INFA, or INFN. There's a little island reversal. Morning star signal. Closed up above the T-line yesterday. Look where it closed today, right here. If this opens positive tomorrow, you want to be buying. Why? Because this uptrend starting with a little hammer gap up through the T-line. If it goes higher, what type of pattern do we have setting up? A J-hook pattern. This tells us that this wave right here is going to be the equivalent to this wave right here. That's a high probability situation that if they go through this level, we're going higher. Same scenario to the downside. If we see a gap down through a T-line, you're in a downtrend until you see a candlestick buy signal and a close back up above the T-line. Now, are each one of these situations set in stone? Definitely not, but the probabilities are so great that you're going to make tons of money as long as you keep going or doing what the charts tell you. If I see a doji, especially in a downtrending stock, and they gap it down with stochastic starting to head back down, that tells me they're rolling over, probably heading back down to the bottom of this trend channel. Doji, gap down. Downtrend until I see a candlestick buy signal and a close back up above the T line. Or if I can see a trend channel where you can see where the resistance area is, you have a doji, down move, and then they gap down through that level, and they've gapped down through the 50. What's that basically tell me? That tells me they're getting out of this in a great hurry. I want to be short until I see it close back up above the T line. Gap down is part of the bearish kicker signal. This is why whenever you're in an overbought condition and you have a nice trend moving, you put your sell stop at the previous day's open, because if they can come back down through that level in an overbought, you've moved from the T line again, the probabilities are they're going to come back and test the T line. Why risk the fact that they might come back and take it back up? You can be selling it out and you can always be buying it back. If you don't sell it out, you've got the risk that you're now covering down here, giving back most of your profits. This is information that the Japanese rice traders have illustrated to us over the last 400 years. The reason we know this is a kicker signal is because for the last 400 years it's worked extremely well, but anytime they gap it down below the previous day's open and start going the opposite direction, there's a force going in that opposite direction. So with gaps and candlesticks, you get extra information. Tells you when a resistance level is not acting as a resistance level. Most of the time we say if you see a gap up in an overbought condition, you want to start taking profits. Close. Jim, I don't get the... let's see. Oh, okay. I see somebody asking about the closing price. Yeah, that's exactly why. Okay, thank you. Yes, a lot of people say the closing price is most important. That's why the Japanese rice traders encapsulated or boxed in the open and the close. Anything else is not the final decision. The close is where the bulls and the mares finally made their final decision. So again, if we see a gap up in the overbought condition, that usually tells us it's time to take profits. However, if it's doing it at an important technical level, like a breakout area, that gives us a different piece of information. That everybody knew this could possibly be a resistance level, but they gapped right through it. That's telling us that there's a whole new dynamic in that price move. You want to continue to hold until you see a sell signal. This is your best friend. Strong up move, pulls back, went through the 50, pulls right back to the 50. The advantage we have with candlestick analysis is we can see immediately what type of signals are occurring at major support or resistance levels. With that information, when we can see a bullish Harami telling us the selling has stopped right here in the 50, what are we looking for? Positive confirmation. If they gap it up, that tells me I've got a wave 1, wave 2, wave 3 J-hook pattern in progress. If this was my price move on wave 1, I know pretty much what my price move is going to be on wave 3. Gap up through a resistance level, this level, and the 200-day moving average. Everybody and their brother could see that this was a resistance level, and this was a possible resistance level. You have a doji followed by a gap up. We know what type of pattern will usually occur after a big price move breaking through a resistance level. Usually a 45 degree off of there. Breakout tells us we have more upside. Kicker signal tells us we're going to have more upside. The bigger this gap up, the higher the probability you're going to be in a nice steady uptrend. This one we bought on the kicker signal. Why? Because we could see prior to that we had a pattern, the fry pan bottom. It started whipsawing, and then they gapped it up. What usually occurs after a fry pan bottom? Usually they break it out, but they will whipsaw it occasionally, and that kicker signal is still our strongest signal. And if it's occurring a lot more upside. Buy signal right here. Why? Because we've got a series of dojis. Doji, gap up. We can be buying anywhere in here because we've had a doji gap up. Now we have another gap up. A doji, bullish engulfing. That tells us the bulls are in control. Not only are they in control, but people are gapping this price up to get into this position. Where's our targets? Probably at least with stochastic still down here, we're going to get through this level and probably get up to this level to fill that gap. This is not rocket science. This is just taking common sense investment indicators and applying the candlestick signals with them to tell you how much force is going to be in that next price move. What does this tell us? We've had a nice fry pan bottom. Now it's really breaking out. Well, they've gapped up in the overbought condition. I am ready to start taking profits. I'm finding a spot that would tell me the bears are in control. Might be halfway down this candle. Definitely would be. I wouldn't want to see them come back below this candle. There's your doji gap up. That's your best friend. This is what the results are usually going to be. Same scenario on the downside. Doji gap down. That's your best friend as far as shorting something. We did that one. We did that one. All right. Candlestick signals anticipating the next price move. There's our slow curve starting to gap up out of here. This is the type of move we usually get out of a slow curve. Remember this, everybody, because when I go to the live charts, you're going to want to see which ones are the slow curves. We have made tons of money over the last 6 to 9 months just finding the slow curve breaking out to the upside. Notice what we have right here, our cradle pattern. Series of indecisive trading. There's the headboard. There's the flat bed. There's the footboard. There's your cradle hanging down between the two trends. This trend will usually be fairly strong. The nice thing about knowing what goes on in individual signals is being able to identify which patterns are setting up. Nice, strong cradle pattern move. Then a couple of days of indecision. Doji type days. What's that tell us about our indecision? It wasn't very decisive. Then they gap it up the next day. This candle right here, kind of our double doji sandwich, is going to be the same magnitude as this candle right here. Just puts us even for a day trader. This becomes a very high probability trade setup. But if this opens positive after a double doji and your stochastics are still heading up, you've got a good probability of having a big price move the same as that one right there. These are all based on reoccurring Keith, yeah, whatever your question is, I'll get to it here in a little bit. There's your kicker signal to the downside. This is the time to be shorting. Anytime you see that kicker signal, gap down. There's your fry pan bottom. There's your fry pan bottom. This is what we call the classic. Fry pan bottom usually creates a very strong price move. A J-hook pattern usually has a prerequisite of a very strong price move, then an indecisive pullback, then the next move is going to be the same wave as that move. This is that rounding bottom. This is extremely powerful for option trading. We were buying the 75 calls for 240 here. We were selling out at 870 here. This is just a high probability. This is what we call the T-line crunch. When they came back up above the T-line, notice how they couldn't trade it back below the T-line as the T-line crunched up into the resistance level. And when it got there, it broke out with a good strength. The slow curve has expected results. And it's usually a good pop like this. We've made tons of money with these types of move, buying the calls down in this area, closing out the positions as they pop. This is not an unusual pattern. This is, we see these time and again. So gaps and candlesticks show extra force in investor sentiment. So that's where we make our big money, is knowing how to apply candlestick signals and gaps together. So I think that's the, Pat said if everybody was going to sit through listening to my dissertation on gaps, we should probably give everybody a special. Right now, we're going to do a special on if you want to have something to review. We've got the gaps at the top and gaps at the bottom. And let me see if I can. I think she's saying just sell it to everybody for 50% off. So here's what I'm going to do. Here's the link. No, that's not it. Bah humbug. Let's try this. There you go. All right. If you want to go to that link tonight, we're doing a special where you can get this as a review for 1.5 off. Now that's for people that are non-members. Okay, there you go. Members, you don't have to worry about it. All you have to do is email Abraham, and he'll send you a copy. All right, now if you will indulge me here for a minute, let me pull up live charts, and I'll show you what I'm looking at when it comes to candlestick signals and gaps in today's market. Let me do this. Smoke them if you got them. Let me see. Okay, yep. Now, what do I need to do here? I need to make these a little bit smaller. In region, here we go. Okay, let's see. For the new folks, the reason we use the T-line is the T-line is extremely effective when using candlestick signals in conjunction with them. Let's make this even smaller where we can see more clearly that the T-line has been acting as a very good support level for this market trend for the last 4 or 5 months. Ever since they broke through it down here, there's been a few days where we've taken profits, but the nice thing about candlesticks is it tells you when the investor sentiment has changed and or it hasn't changed. So there was days we were taking profits, but then there was days we were getting right back into the market. And as you can see, this has been working very nicely. Up move, profit taking, up move, profit taking, up move. Now we're kind of moving sideways. About the same area there should be some profit taking. The only thing that has not happened yet is that we have not closed below the T-line on the Dow. It's staying up. Now, is this getting a little bit iffy? It would if we didn't use the analysis of the other indicators or the other the markets. The NASDAQ had a doji followed by bullish trading. We have a very simple rule of the doji. The doji is going to move in the direction of how they open it after the doji. Yeah, the T-line is the 8 exponential moving average. So yeah, got kind of a little morning star type signal here, but let's see. If information is not complete, then the system is useless. Ooh, I don't know. So anyways, this tells me that the combination of the two is that we're not seeing any selling, that the bulls are still in control. Now, let me show. We in the chat room. We were trading this one, Pshaw, CLSN, on a nice breakout from a few days ago. Notice we had a little rounding bottom, and they started breaking it out. Made some very good profits on, what is today? Thursday, yesterday. Then they gapped it up again today, and people say, well, why did you take profits today? Because during the day, it traded all the way up here, which is fine and dandy. If something wonderful was happening, it was still going higher. If something was wrong, they shouldn't be able to bring it back down through the open, which they did. That's where we stopped out. So we took our profits there. Now, remember, we've got the rule of the doji, but also remember, where does the exhaustion set in? Usually with a gap up and a candlestick reversal signal potential. If they open this lower, we pretty much have an idea where they're probably going to be taking it back to the T line. If they open it higher, what's that tell us? This was a profit-taking day. If they open it higher, it tells us the profit-taking's over. They're still taking it up. You can always buy back in. Okay, all right. Let me do this. Let me catch some of these questions here real quick. Just let's see. What's the questions? Keith, you've got a question that's apparently bugging you. Re-ask your question. Yes. Candlestick signals, because the probabilities work so well that they produce your discipline or they improve your discipline. I mean, if you're in a stock like this and you bought it, I bought this at $1.15, I think, on this day right here, and it breaks out big. What's everybody's dream now that we've got a big one that's going to go way up? Except the probabilities tell us that investor sentiment works in specific ways, that if we see a shooting star gap up in an overbought condition, that pretty much tells you there's profit taking going on. I can always make a decision of whether to get back in. So it helps make decisions for me. It keeps my discipline and keeps my hope out of my trading. Oh, what one did we have today where we were kind of hoping that it was going to move higher? Pshaw. I'll think of it. Let's see. Can you comment on using 60-minute intraday or versus daily for reversal signals? Russell, yes, the signals work just as well on a 1-minute chart, 5-minute chart, 10-minute chart combination as they do on a daily, weekly, or monthly, all depending on your time frame that you're trading. It all comes back to one basic premise, that the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. I used to trade the E-minis very successfully off a 1-minute, 3-minute, 10-minute chart combination. I'm usually trading commodities using the 10-minute combination, and then if I see something setting up, then I move down to my 5-minute and my 1-minute to do the actual executions. This is just great. I've lost my let's see. I've lost a spot where I ended. Okay. I'll find it. I'm good at this. Eventually. Let's see. Okay. Now I got to keep scrolling down. Well, where the heck did I leave things off? There you go. Okay, there we go. All right. See, there are many times you mention a wave. This, however, is not an Elliott wave. Correct? No, this is just wave 1, wave 2, wave 3. Prices don't move straight up. Prices usually move in waves. They'll come up, they'll pull back. They'll come up, they'll pull back. Right now we're long DDD because one of the questions is what's the J-hook pattern? The J-hook pattern is a strong price move, an indecisive pullback, and then the next wave starting. So no, I don't use Elliott wave. I just want to see where I am in wave 1, wave 2, wave 3. This is wave 1, this is wave 2, this is wave 3. This one here was wave 1, wave 2, wave 3. Now this becomes wave 1, wave 2, looking for wave 3 until something tells me differently. So I'm not trying to do Elliott wave. Elliott even said that his wave count was very subjective. So I'm not going to be in this for a long term. I just want to see what's going on right now because I'm a swing trader. I'll probably be in this trade hopefully for the next 4, 5, 6 trading days, telling me I'm in the next wave up. Oh, now I've lost the spaces again. Does his service work if you are full-time? Yes. You can send, I put out comments every morning and every afternoon. At night, you can go to the members area and see what stocks we recommend. And again, each recommendation is based on a video that says this is why we're buying. So you're not just getting a pick, you're getting some further education of why that pick was being established. Let's see. Here it is. Okay. After a doji and the gap requires you a setup, do you buy or sell on the open of the next candle, or do you wait until the close after above the T line? Which is best? And what is your definition of a gap? Higher than the previous high or higher than the previous close? Subjective there on the gap up. This right here, even though it might not have gotten above, let me make this a little bit bigger, might not have opened above the previous day's high. It did gap up from the previous doji day, and I can see my stochastics are heading up. That to me is still a kind of a gap up. That's telling me they've opened it positive and they're moving in the right direction. In this case, we've had a gap up. That's where they closed it here. They opened it higher above any of the previous day's trading. So I've got a what we call kind of a belt hold signal, a rounding bottom. And now if they trade this positive, we're breaking out into wave 3. So I add all these up. It's not one signal. It's a combination of being able to visually see what's going on in investor sentiment, adding all the parameters together to make it as that you're in the right place at the right time. VS, that's what we were doing, is if you see a steady move up and then they gap it up, that's usually exhaustion at the top. On the other hand, if they've come back and they've consolidated, we notice that in this case, they gapped it up, but your stochastics aren't anywhere near the overbought area anymore. They've consolidated. Now they're getting ready for the next move. OSTK, yes. This is, again, why we use the probabilities that if we had a nice strong up move, notice how this up move started with a doji gap up. Very strong price move. Then we had an evening star signal. Didn't really want to close below the T line. It looked like it was starting to move out again. Had it opened positive and closed positive today, or even stayed positive, this would have been a very strong J-hook pattern. But the fact that they turned it around and closed it below the T line, with stochastics still now heading back down, that gives us a whole different characteristic of what's going on in investor sentiment. This is not a positive move anymore. Anytime you see a close below the T line, the probabilities of it going negative from there is very, very strong. That means something's happened. Okay. There's still tons of questions here. No. Nobody gets removed from this forum if they're asking legitimate questions, and that was a legitimate question. My problem is I can't read fast enough. That's why I'm scrolling all the way down to the bottom and starting over. So there are several dojis in the charts. Do you filter them out based on the overbought? Yes. Just because a formation that looks like a signal is in a chart pattern, it doesn't necessarily mean it's a signal. Remember, a reversal signal needs to occur in the right place of the trend, which means a candlestick buy signal in the overbought area doesn't mean anything. A candlestick buy signal in the oversold area means quite a bit. A candlestick sell signal in the oversold area doesn't mean anything, but a candlestick sell signal in the overbought area means quite a bit more. All right, let's take a look at some live charts here real quick. Things that kind of, let's see, have some significant value of being looked at. This one I'm going back to because notice what they did here. They gapped this up, pulled back to the T-line, and then we had our proverbial 45 degree. But now we can pretty well analyze that we've got a wave one. Wave two pulled back to where? Smack dab to the 50-day moving average. We started seeing buy signals. Now we've had a hammer signal with a little gap up above the T-line, above the 50. Stochastics coming up. What's my target here? Well, if this was a 10-point move, I'm anticipating this will be a 10-point move too. Why do prices move in waves? Because that's human nature. They just move in waves. There's people when they're buying, there's people when they're selling, and then they start buying again. Yes, out of the 50 or 60 signals, you only have to learn the 12 major signals. Once you understand those signals and recognize where they occur, you're going to have as good a grasp on trading as somebody that's been trading for 40 years. Okay, let's see. So these are the type of signals I call your best friend. When you see a doji in the oversold area, notice what it's done. Number one, it's broken the T-line. Number two, it's broken down this downtrending channel. Number three, they gapped it up. This tells me there's going to be high probabilities of a good, strong price move. That's FIO. RBC is probably going to be seen on a recommended list tomorrow because notice what they've done down here at the bottom. First of all, you've got a scoop pattern. A scoop pattern is very simple, flat handle, pull back, and then they start it back up again. You got a left-right combo. Left-right combo is a doji followed by a bullish engulfing signal. A doji, your double doji bullish confirmation, which is creating your scoop. You're above the T-line, and you started up with some gap ups. Where's our target? Probably your first targets are right up here to the moving averages, and possibly as high as coming up here and filling these gaps. These are just pieces of information that we know have worked consistently well in the past. Oops, I think we did INFN. Yes, for the Morningstar signal, if it breaks out through this level, you want to be a buyer. I think we recommended this a couple of days ago because of the doji, gap up, Morningstar's type signal, abandoned baby signal. Remember, that's one of your strongest reversal signals. YRCW. Wanted to show this one because of the slow curve, gap up. Notice what the result was of the gap up. Very strong price move because of coming out of a slow curve. Where did it start selling? When you had a gap up in the overbought condition, doji, followed by a bearish engulfing, your left-right combo, where were they going to take it back to? They're bringing it back down here. This was the perfect time to start taking profits. The nice thing about candlestick analysis is there's very simple rules of when to take profits. We're not trying to buy at the absolute bottom, and we're not trying to sell at the absolute top. We're trying to find that big percentage price move in between and then get out somewhere where we got most of our trading done. Our scanning techniques, we can find the best trades each night in probably less than 20 minutes. If you're new at this, it will take you 20 minutes. I can usually find good trades each night, somewhere between 5 and 7 minutes to take me to find, just hitting the, updating the scans and coming up with the best signals. Let's see, GROR. Let's make this big enough where we can all see it. Very simple. Little doji, followed by a gap up through this downtrending channel. There's our first target, but your stochastics are just coming out of the oversold area. Good possibility they can go right through the 50. And AEG. AEG, notice how this one started. Wave 1 started with a doji, gap up, failed with a doji, gap down, came right smack dab to the 50 with a left-right combo, and then a gap up from a bullish candle. Notice they've gapped this up. What's that tell you? They're trying to get into this stock with great enthusiasm. That's the positions we want to be in, with a candlestick buy signal and great buying enthusiasm following it. Again, this is not rocket science. This is just simply identifying, let's see, what one was that? Identifying the high probability trade setups that the Japanese rice traders identified for hundreds of years, where the graphics that showed you where investor sentiment was starting to move in your favor. Bullish trading, gap up through the resistance level, another little doji gap up. This tells us there's probably more upside to this one. That was, I forget what that one was. Oh, that was Krispy Kreme. NTWK. There's that little double doji, gap up through the T-line, kind of a little scoop pattern. Where's your likely target? Where everybody can see, probably up here at the 50-day moving average, a good 14-15% away. We did this one before, DDD, wave 1. Notice how wave 1 started. This was very simple. Came up through the 200, came back, told us the 200 was acting as support. Where was it going to? Up here to the 50. Were we going through? No, we had a kind of a doji type day that told us there was indecision. They brought it right back to our T-line. Bullish hammer with confirmation. They went through. First time they fail a resistance. The second time they'll go through. Nice strong uptrend coming out of this rounding bottom. Now another little rounding bottom, J-hook. This one should be going much higher. And Camp. Camp is that little rounding bottom, and notice they gapped it up. They used the T-line as support. Another strong day. Notice how they came out of this rounding bottom. Nice strong price move. So this to me is wave 1, wave 2, starting wave 3. Another one that mirrors this one is IMMR. Came out of this move. Notice the pullback, very indecisive. Doji, 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 bullish trading. And now they're rolling out. Stochastics coming up. This is just investor sentiment building up. That's where these big pops. Phil, I've been trying to get TradeStation. I was working with Tom Saznoff at, not TradeStation, Thinkorswim. I'm supposed to be doing some stuff for TradeStation in September. That was the first time we could get together with them. They want some formulas done up. How can you screen in under 20 minutes? There are thousands of stocks. Brad, that's a whole different session. We go through very simple scanning. I dump everything that looks good into one bucket, one watch list, and then I go back through that watch list and I start adding up everything that shows me that there's going to be a high probability move and narrow it down to the best, usually best 4, 5, 6. Because what that usually means is even if you find the best trade situations, they have to open properly the next day. So if the 2 or 3 that I picked don't open properly, I've still got a list of another 2 or 3 on that list that I go back to and see if they're working. If none of those on that list work, I go back to the previous list where I got those that I cultivated up to see which ones of those are working well. So it's a very simple process. Again, there's our doji sandwich. What do we expect after a doji sandwich? More upside. But it was that gap up that started the uptrend. And AMAT. AMAT had a Morningstar signal, came up through the T-line, strong price move, pulls back, kind of a little mild scoop, but notice you had a doji gap up, back up through the T-line, another doji, little positive open. Now you're breaking out, so this one's, you can either say this is a nice rounding bottom or kind of a little scoop pattern telling us this doji gap up is probably going to take this one up higher. I say probability, or probably, because anytime you see a pattern like this, it usually indicates there's going to be a follow-through. There's your doji gap up in AKK or AKAM. Gap up, 45 degree. Pull back. Now you have kind of a doji bullish confirmation through the T-line. This one's very simple. You buy on positive trading, and you don't let it close back below the T-line. The nice thing about candlestick analysis is that it tells you when to get in, and it also tells you when to get right back out. I often tell people in the presentations that I give that for 30 some odd years, I hate to think how many it is now, you hear all these money managers tell you how to that you should cut your losses short and let your profits run. The only problem is I've never heard a single one of them tell you how you cut your losses short and let your profits run. It's very simple when using candlestick signals. Terry, everything's downloadable. All you have to do is when you order it, you just click on a button and it sends you the downloads. Okay, let me see what else we got in here. CDE, rounding bottom, gap up, that's going higher. What did I just do? KGC. There's your fry pan bottom with a gap up breakout. What do we want to see at the end of a fry pan bottom? We want to see the enthusiasm come in. Most of the time the enthusiasm, remember we just went through a session saying, all right, you want to see candlestick buy signals in the oversold area. Now we're seeing breakouts in the overbought area. That's completely different. However, if they're breaking out after a fry pan bottom or a J hook, usually you're going to be in the overbought condition. That's where the enthusiasm starts come in. And let me do a few more, and then I'll show a few that look like they're setting up real well. Let's see. AFI was one that people were pointing out. Oops, got to make this one bigger. AFI, this is a nice little breakout, a doji followed by a positive move. Volume is usually good on this one. This one I wouldn't be afraid to be buying tomorrow on positive trading because they've come out of a series of indecisive trading, little fry pan bottom trajectory. If they open this positive, that means they're breaking out somewhat along the same lines as this. You could be up in the $2.25, $2.30 range fairly easily. Let's see. MTOR. MTOR started with that gap up 45 degree. You stay long in these positions as long as you don't see a sell signal and a close below the T-line, which also makes, I think this is brown shoes. Notice how when it came out of this little rounding bottom, it popped. This is where you make big money with option trading. ABX, one of the gold stocks, also gapped up from a little left-right combo. Enough stochastics to tell us they probably will get through this area. There's still a gap up as high as this level they could reach. And let's see. Oh, HIMX. There's your little Morningstar signal. Notice what this did. This had a doji gap up through the T-line. Morningstar signal, stochastics curling up, and it broke this level right here. What can we visually see on this chart. We basically can see that we're in an uptrending channel. So I would suspect your next target is the top of this trend channel because you're coming up from a doji gap up. You got a lot of room in stochastics coming back up. That produces a good 20-25% return on that trade. Okay, let's see. I'll try to go through some of these real quick. VNDA. There was a reason I had this, and I don't know what the reason was. For some reason, I had this one in here. I think it was more to show, I know, because notice how it came right back to the T-line, gapped up, and then you've been in a good, strong 45 degree after that. WLT is the opposite. We know what a doji sandwich looks like. We've seen our dark cloud, our doji gap down. We can't get up above the T-line. Stochastics heading down. We're rolling over. So on a much larger chart, oops, that's not the larger chart. We're essentially in a downtrend. Now we've got the dumpling top, which is a slow rounding curve opposite of a fry pan bottom. And we know the simple rules of a doji. They're going to move it in the direction of how they opened it after a doji. So if they open this lower, that means we're probably still on a very strong downtrend. You want to be short this one. Yeah, I trade commodities. Let's see, CNO, because these signals work. As a matter of fact, remember, these signals were developed on the most basic, slow-moving of all commodities in the world, and that was rice. And the Japanese rice traders that use this not only became wealthy, they became legendarily wealthy. Now, here's another one that probably should be, is probably going to be on the recommended list tomorrow. Notice how this one started with a doji gap up off the 50-day moving average, kind of got this trend channel setting up. This one could have a very strong price move, especially on a positive trading breaking out through this area. Fry pan bottoms are usually, that's not what we want. What's happened here? Notice what happens out of a fry pan bottom. When they start getting excited at the other end of a fry pan bottom, that's where your big price moves will start showing up. That's why we're still in IMMR, coming out of this little fry pan bottom. And I had a couple more here. I forgot where they are. Let's see. Also, your strongest signal is the kicker signal. Yeah. And if you watch Facebook, notice Facebook was heading in this direction, and they opened it above the previous day's open and went this direction. That's a kicker signal. This is very simple. If they start trading this up above the T-line tomorrow, you definitely want to be a buyer because the kicker signal is your strongest reversal signal as a signal by itself. That tells me that this could be a quick pop back up to the 50-day moving average. All right, here are a few that are setting up. Pandora. Oh, the reason I'm showing Pandora is if you see a pattern setting up and they gap it up, that's usually a good indication. But as we saw in Pandora, it came right back down again into the trading range. So this is to go with the idea that the probabilities are in your favor, but if you see it not working, you close out the position, because if this gapped up, we should have been going this way. However, notice what this stock isn't doing. It is not closing below the T-line. You've got our little rounding bottom where you suspect your next target is. They're going to come back up and test this area. So this one you can still be buying, because if you look at the longer-term chart, you're basically coming out of a big fry pan bottom, now a little cup and handle. They're still taking this one up. SONS. There's your little scoop pattern, starting with a doji, gap up through the resistance level. These are the ones where if you identify the signals and the patterns, right down to the signals that are creating the patterns, it just puts you in a high probability situation of not only being in a profitable trade, but in high profit trades. Is the T-line works only in stocks? Definitely not. If you look at the dollar, we have a bearish engulfing signal, and it closed below the today. It closed below the T-line. We're in a downtrend, which means the British pound. Notice this is what we call a flutter kicker signal. Notice how it was in a downtrend. We had a down day. Then they gapped it up at the previous day's open and did a doji. That was our first sign to get ready for positive trading, because if they gap it up above the previous day's trading, they are not in a downtrend. Now, what is our simple rule of a doji? It's going to move in the direction of how they open it after a doji. So if they're opening it positive, we want to be a buyer, because if this does a doji or a flutter kicker, if you took out this little doji, you basically have a down day going this way. The next day they open it and go this way. All you have is that little flutter in between. But this makes it very easy to see that if you didn't see this gap up and you saw this setup where it gapped up above the previous day's open and did a doji, you just get ready to put your money in a positive trade the next day, and you're going to have a high probability not only of a good trade right here, but a flutter kicker is just like a kicker signal. It starts a very strong uptrend. That's right, a kicker signal with a hiccup. And I forget which one's the euro. Notice how it's come back up above the T-line with kind of a flutter kicker setup. While we're on commodities, this is sugar, which basically you want to stay short sugar as long as you can't come up above the T-line. Notice what they did just a few days ago. They gapped it up, but they couldn't close it above the T-line. This told me now you have a left-right combo. They're still taking this one lower. And let's see, I was going to look at lean hogs. Lean hogs came up through the T-line, bounced off the 50. Where's the likely target? Probably up here at the 200-day moving average. That's when you start taking profits. Left-right combo is a doji followed by a bullish engulfing signal. That doji is kind of your left jab, indecisive. The roundhouse right is the knockout. So looking at Sohu, anticipating we got a fry pan bottom breakout. Now it's waffled. Did a doji day right on the T-line. Makes this very simple. If they start opening this positive, you're going to have a J-hook pattern setting up, which means this is wave 1. Wave 3 will be the same magnitude. AMPE, doji gap up. If they break this or open positive, they're breaking out through this level. There's still going to be more upside. Just as a side note, this is what we call a tweezer bottom. Notice how these two lows right here were exactly equal. This looks like a tweezer. That basically tells you there's a lot of support right here that upon seeing a reversal signal, you're on your way up. SPPI was another one that has a fry pan bottom setup. As long as it doesn't close, now it got scary yesterday, closed right just below the T-line. So somebody said, well, if it closed just below the T-line, why do you hang on to it? Because up until this point, the T-line has been a very good support level. So I'll give it one more day. Today we did a little inverted hammer. Makes us tell us that if it opens positive after an inverted hammer, the probabilities are extremely high. They're going to take it positive. So why do we stay in this one more day? Because we can see a pattern and identify what's going on, that this T-line's been acting as support. Versus Overstock, which we don't have a pattern. We're moving sideways, and it closed below the T-line. That told us there's not any more strength here. We're not coming out of a fry pan bottom. We're getting toppy. Let's see. And VRTX, this is telling me it's time to start watching this one. It is starting the next wave. And Oh, I did this one, I think. ESI. Notice the rounding bottom. It's a nice strong move. Bearish engulfing. Now we've got a little Morningstar signal. Positive. That tells me that we're probably in a J-hook pattern starting the next wave. It's actually a reverse right hand bottom at the top. Yeah, but it's not. I know it's not really that rounding. Notice we've had a sell signal here, an evening star signal, brought it back up, bearish Harami, brought it back up, evening star signal. When you start seeing a bunch of sell signals, that pretty much tells you what's going on. The bears are starting to take control. Okay, other than individual stocks, do we have any questions that I have missed? Okay, I'll do BBRY for J. This one tells me as long as it can't close above the T line, you stay short. Okay. Notice you had the bearish engulfing signal, and since then they haven't been able to close it above the T line. Now you do have stochastics in the oversold area. Does that mean they're ready for a reversal? No, that just means you're oversold. What you need to see in an oversold area is a candlestick buy signal. Let's see. What is your swing option service called? Oh, Justin, it's all part of the service. We've got a chat room that's open every day. We usually have about 250 to 300 people there. We've got people throwing out ideas. Okay, Keith. Okay. All right. Keith, go ahead and ask your question. And let's see. Oversold. Now got way behind again. We're not going to do individual, but because Tesla is so much in the, it's gone from 30 to 105 or 110. All you can do with Tesla right now is stay long until you see a candlestick sell signal and a close back below the T line. Does positive open mean buy confirmation, a tick above high? Now, and positive open means if we wake up tomorrow and we're ready to buy something on a positive open, but the pre-market futures show the Dow is going to open down 120 points, that to me is not a positive open. But if we see a stock, let me see, which one was I going to do? EXPR, what does that look like? Let's say I'm going to buy this because of the doji gap up, that I'm expecting a 45 degree, that I want to see a positive open, which means I want to see it open pretty relatively close to where it closed and see the buyers are stepping in. I don't want to see it open down here. Now, if it does open right here, when we do in our members area, when we do our entry and exit strategies, one of our strategies is if it opens down here, that's not a positive open. But that may just be profit taking. What we want to see is the buyers are there. So we put our buy stop one tick above where it closed, because if it opens down here and starts moving up, that tells me the bulls are still there. So back to, I don't want to see the market opening down, or I don't want to wake up and see the pre-market futures showing that we're open very strong to the downside, because that tells me I shouldn't be buying. If we wake up and the pre-market futures are up 40 and the stock I'm looking at is opening flat or slightly above, that to me is a positive open. So do you put in a buy stop just above it, or do you wait for the market to open positive before you buy? Some people do not have the opportunity to sit here next to their screens or heading for work when the market opens. So if I was going to buy a stock, let me see which ones well, that's just a fine howdy do. I was putting, let's say, for example, we've already recommended camp, but let's say we were recommending camp for tomorrow. If you're on your way to work, what do we want to see this one do? We want to see it open. I see it closed at $13.09. I'd put a buy stop at $13.15. That if it came up through there, it was doing what it was supposed to. Now, what's that give you at risk? That it could come up and hit 14 or 13.15 and then immediately sell off. That's a risk on any trade, whether you're sitting here watching it or if you're driving to work. Once you get to work and you got a few minutes and it's trading positive, now you can set your stops at some place. So if this one opened positive tomorrow and traded positive, then I'd set my stop early in the day right here where it closed, because it shouldn't come back down through that level. Then if it closes up here, the next day I set my stop up higher. Let's see. When you see a gap up, do you buy immediately? Not necessarily. If I saw a gap up here, what I don't want to see is it starts fading back. If it does start fading back, I'm not going to buy it, because that tells me immediately the buyers aren't there, the sellers are there. If it opens positive, I may wait a minute, 2 minutes, 3 minutes to see whether the bulls are still buying. That's when I want to buy. I want to buy in the direction of the trend that I expect to happen after a buy signal. So I might have to wait 2 or 3 minutes. And there will be other times when I'm this close to the T-line, I might want to make sure it's well above the T-line before I start buying. There are other times when, let me see. I can't remember which ones they are. There might be other times where you move way away from the T-line and it opens positive. I'll buy then, because I know that my next resistance level is up to the T-line. Then I'll see what it does from that level. Let's see. Michael, the T-line works just as effectively on the 1-minute chart as it does on the monthly chart. Okay, let's see. Is there a PDF or PCF for Doji Gap Up? Yes. All these formulas are on our website somewhere, and if they're not, all you have to do is, if you're doing a test membership or in the members area, just put out there, does anybody have the formula for a Doji Gap Up? Somebody will put it in there, and all you have to do is copy and paste it. Let's put it a different way. Let's see. Put it a different way. Shares a lot of good scan information on the chat. Okay. Okay. Thank you. Whoops. Now it's trading on iPhone. Yeah, I think Pat's trying to get everything set up to where even where you can get your trade information on iPhone. That's all a different area than what I do. That's the technical area. Double doji is usually a doji. There's a kind of a double doji day. They took it up, indecisive day, doji day. Now took it positive. That tells me that we're going higher. Do you consider RSI? I don't use RSI. Now, that doesn't keep you from using. I tell people, if you've got a successful trading method, if you overlay it with candlesticks, it's going to make that method much easier to evaluate and visually recognize when the signals are. Do you always buy? I usually buy, Gary. I usually buy probably 85% of the time. I'm buying within the first 45 minutes of the day. 10% of the time, I might be buying going into the close if I think the market's going to continue higher the next day, like after a big reversal signal. And 5% of the time, I'm buying and selling during the day. But most of it's at the open. Some of it's at the close. Where can you find pre-market opens? If you, Gary, or let's see, who asked that? David. If you have CNBC, I have CNBC on my TV all day long, but I turn the sound off. In the morning, they'll show you what the pre-market futures are doing. And a lot of the trading softwares will, I have the YMs on my Thinkorswim trade setups, and that usually gives me an indication of whether they're opening the market positive, negative, or flat. You can always put in good to cancel stops. Yes. Double gaps always be faded. Steve, no, not necessarily. It's usually after, if you have 2 days of gap ups, that means they're really anxious to get in. It's when they go gap it up enough that they've gone from overbought to oversold to overbought. That's when you start looking for profit taking. 1233, yes. Now again, I'm just showing you kind of the framework of what works successfully. And every time somebody shows me something that might improve the trading, I'll add it, but I won't change what I've got existing. I'll add it to see if it improves my probabilities of being in the right trade at the right time. But how well does the T-line work on a 1-minute chart? That's right. Yeah, again, it's the cumulative knowledge of everybody buying and selling during a specific time frame, whether that time frame is 1 minute or 30 minutes or 30 days. Do you buy the stock or the option? Joey, I've got accounts like my own account where I'm usually trading options because, but I've got other accounts that I strictly trade the stocks or a combination of stocks with some options. All depends on the nature of the person, how speculative they want to be. Now, I trade options only because I know that every time I put on the trade, the probabilities are in my favor. I'm going to make money. So I want to get as much leverage as possible. Okay. All right. I can see I've kept everybody well over time. The T-line is the 8 exponential moving average. What is the expected move in a day for these stocks? I don't know. For these stocks, I don't know. I just know that anytime I put on a trade, the trade's going to move in my direction with a high probability. Plus, I am usually in positions where if there's a big price move, the probabilities of me being in that big price move is much greater by being in charts that tell me that there's strong buying coming into them. Jules, the Metastock formula, as a matter of fact, I worked with Metastock today, getting everything set up. I'm hoping that by Monday they have everything finalized and then start getting the formulas out to everybody. How many minutes more? I know I've put a lot of people to sleep. We're probably just about done. Yes, we have a lot of different patterns. I'm now scrolling all the way down. We've got there's a Doji gap up formula that Ed's putting out, and that's a nice thing about our chat room too is we've got a lot of people in there that are very unselfish as far as their time and their information. That it's basically just a help chat room where if you're trying to learn candlesticks, your learning is expedited quite a bit because it's a place to go ask questions, and it's also a place to go kind of learn what other people are looking at to see what's working successfully. Yes, a short, a put is buying a piece of paper that says you're allowed to put a stock to somebody at a certain price, which means you're hoping the price goes down. So you're either shorting the stock or you're buying a put. Do you trade end of day using this strategy? No, I usually wait to see confirmation the next day, but there are times where near the end of the day you get a good chart pattern that I will trade a trade for the last 15 minutes because it was doing a fry pan bottom breakout going into the close. Let's see, I think I saw something about Forex. It works just as well on Forex. Candlesticks do not work in a specific market. Candlestick analysis is the graphic depiction of what's going on in an investor sentiment. And anytime you have any trading entity that has investor sentiment, which is all of them, they're going to work effectively. All you have to do with Forex is figure out what your open and close time frame is. Now, during the day, you can use the 1 minute, 5 minute, 10 minute, 30 minute, but you're not going to get as many signals because you've got a rolling trading, whereas you're going to get a lot more gap ups with situations that open and close during the day. Does the volume matter of the days of the gap up? No. We're not trading volume, we're trading price. And the example of that is if a stock is going up and nobody's willing to sell it, that stock's going to go up on much lower volume. You can use these on weekly options. Again, they can be used for anything. Okay. Oops. I guess I've scrolled backwards. I can't suggest a broker. Raj, that's where if you come into the chat room during the day, ask people what ones they like, and you'll get opinions across the board from people using all sorts of, or all different ones. The scanning softwares, I use TC2000. I use Metastock. Right now I'm writing up formulas for NinjaTrader. I was writing formulas for Thinkorswim, but that was right at the time that Tom Savzanoff sold out to Ameritrade, and they've never come back to me after that. Okay, I'm all the way down here to the bottom. Oh, no, I was way up there still. Am I single? Yes, but only for another 3 weeks. Okay. With that, let's say we'll call it a night. I hope everybody learned a little bit tonight to add to their arsenal of education on candlesticks. We'll see everybody in the chat rooms. Thank you for coming.